I am Nicolas of Capital Link, and I would like to welcome you all to today's webinar. This is our second webinar within Capital Link's Japan Maritime series. On Thursday, October 28, 2021, we plan to host in Tokyo as a physical forum our second Japan Maritime Forum. Between now and then, we will continue hosting on a regular basis a series of webinars that aim to feature and showcase the ongoing developments in Japan's vibrant maritime community and its continuing role and contribution to the global maritime industry. Today's webinar is on a critical topic, both for Japan and also for the global industry. It's on the topic of the shipping industry. It's on the topic of ship finance and capital raising opportunities in Japan. We are delighted to have with us a terrific panel with top-level executives and major market participants. We have with us two major Japanese financiers, Mr. Takahiro Matsumoto from Financial Products Group and Mr. Koichi Onaka from Sumitomo Mitsui Trust Bank Limited. We have with us two major international shipping companies with a track record of successful capital raisings in Japan, Mr. Martyn from Grindrod Shipping and Mr. Simos Spyrou from Star Bulk Carriers. And the moderator is Mr. Nicolas Duran, partner and director at Fearnley Securities, a global investment bank with deep and significant involvement arranging financings between Japanese institutions and global shipping companies. I would like to thank our partners for these webinars, DNVGL and Fearnley Securities. And of course, I would like to thank again the panelists and the attendees for making this webinar such a success. Without any further delay, I will turn it over to Nicolas to take over the discussion. Again, thank you for being with us. I look forward to a great webinar. Thank you.
Thank you very much for that introduction, Nicolas. So good afternoon and good morning to all of you, whether you're listening in or participating on the panel. My name is Nicolas Duran. I head up Fearnley Securities asset-backed financing business and have been leading our efforts in the Japanese market in recent years. I'm very pleased to have with us a very strong panel with players who have a significant footprint in the Japanese financing market, whether as lenders or capital providers, or as borrowers or lessees towards the Japanese market. So with that, I would like to just give each panelist a few seconds to introduce themselves before we dive into a list of questions and topics to be discussed. So if we start with you, Matsumoto-san, a few words from you on yourself and FPG.
Yes, thank you for introducing me. I'm Takahiro Matsumoto of FPG. Financial Product Group was established in November 2001 by our current president, Mr. Tanimura. He used to work for the Sumitomo Leasing, one of the major leasing company in Japan. Then he became a representative of ING Leasing Tokyo representative. Then he established his own company named Financial Product Group. Our main business is the arranging the Japanese operating lease product, mainly for the aircraft, vessel, and the container box product. Currently now, FPG is listed on the first section of the Tokyo Stock Exchange market, and we are the biggest equity underwriter in the market. Our business is approximately 60% comes from the aircraft JOLCO transaction, and the 25% for the vessel JOLCO transaction, remaining 15% for the container box transaction. 2020 was a very tough year for us because of the severe market slump in the airline market. However, the shipping transaction was relatively popular among the investors because the shipping market condition is much better than the that of the in the airline market. So we are focusing for the arranging deal for shipping transaction right now.
Maybe we should, Onaka-san, would you like to follow? Maybe we should just each introduce ourselves and move forward.
Okay. Well, my name is Koichi Onaka from Sumitomo Mitsui Trust and Bank. Well, I'm very happy to be here today. Thank you very much for the invitation to the panel. SMTB, Sumitomo Mitsui Trust Bank, is one of the largest senior financing provider in Japan. The total exposure to maritime business is at the moment approximately 14 billion US dollars, which is the largest in Japanese market, I think. Out of which approximately 20% exposure is to non-Japanese tonnage providers, shipping companies, and other players. And we are trying to increase that share in order to grow our shipping the business. We are the only one, the signatory of Poseidon Principal Association, established 2 years ago. And I am one of the steering committee members of it. I am very happy to talk about that their activities in this panel if somebody is interested. Thank you very much.
Spyros?
Yes, good morning and good afternoon to all. My name is Simos Spyrou. I am co-financial officer, co-chief financial officer of Starbulk Carriers Corp. Starbulk is a dry bulk shipping company. We currently have 119 dry bulk vessels ranging from Supramaxes up to Newcastlemaxes. Almost evenly split between the three asset classes. I mean, Supras, Ultras, Kamsarmax, Panamaxes, and Capes and Newcastlemaxes. We are probably among the largest dry bulk operator, public operator in New York, in the New York market. And we currently are quite active in the Japanese financial market. We have recently closed our 8th transaction in the Japanese market financing. We have approximately 10% of our current debt exposure from the Japanese market.
Okay, thank you very much. And I'm very sorry for the interruption. My audio and webcam system just went completely haywire. So can you all hear me now?
Yes.
Yeah.
Okay, great. Again, sorry. So thanks for the intros.
Excuse me, Nicolas. I haven't introduced myself.
Oh, I'm very sorry, Martyn. Sorry,
I'll be very quick. Sorry, Martyn Wade. I'm the CEO of Grindrod Shipping Holdings. We're listed on the NASDAQ in New York. We're an owner-operator, predominantly dry cargo these days, with around 40 handies and super ultramax. All Japanese. We focus very much on the Japanese market. We've been active in Japan for over 25 years. We've only ever ordered new buildings in Japan. We charter Japanese, so we do have a bit of a love affair, which is quite well known on the market, and we believe in the Japanese brand. And we've done a number of sale and leasebacks and also financing with several Japanese banks. So it's one of my favorite countries in the world. I'll leave it at that.
Thank you very much, Martyn. Have all of you now been introduced? I couldn't hear while you were all talking earlier, so apologies for that. So let's jump into our first question. And I guess we can start by asking SMTB as a lender this question. What type of Japanese financing products are currently available to overseas ship owners, and which ones are call it the most prevailing these days? If you could start with that, Onaka-san.
Okay. We are a commercial bank, so naturally our main product is senior secured loans to our customers. We do not provide equities and very few the mezzanine type of financial products. And so that's the position. And in this the maritime market situations, the typical type of finance to tonnage providers, the shipping companies, with their long-term employment, with the very liquid the assets, namely dry bulks. And well, Japanese shipping companies are most popular as employers, but those kinds of transactions are very limited at this moment. So in a nutshell, we are now, it's very, how can I say, difficult to find. It's a very conventional, typical transaction. So trying to provide senior leverage to JOLCO transactions, or looking for the opportunities to work with some equity funds in the future. That's our situation.
Okay, thank you. And Matsumoto-san, sitting at the major, call it equity JOLCO underwriter, you obviously also work with overseas lenders. So that means that you're maybe involved in transactions covering more debt providers than just the Japanese banks. What kind of products do you see being offered to Western or overseas ship owners these days with some kind of link to Japan?
Yeah. We are, our customers are various shipping company and tonnage providers all over Japan. And our product is arranging the JOLCO transaction, working with the commercial lender. And sometimes we compete with the other product. That is some cases, BBC or TC, whose vessel is owned by Japanese ship owners, or some cases, Chinese leasing companies. Especially, we will compete with some cases, Chinese leasing companies. From the cost competitiveness, JOLCO would be the most probably the cost competitive product in the current market situation. However, we do not provide enough flexibility to the charterers. We can only provide one-time purchase option. However, some other product, Chinese leasing company product, or Japanese ship owner product, they can provide the multiple purchase option. Some cases a purchase obligation. But our product is a Japanese operating lease product, so that is an option, also the one-time purchase option. So there's some difference criteria for the products. So some shipping company prefer our product. Other company may prefer the more flexible product. That will be judged by the charterers' intention to use the asset for how long they are going to use, or how would like to have the flexibility or not. That make a decision for them.
Okay, thank you. If we try to hear the perspectives of someone sitting on the other side of the table, maybe you, Simos, could tell us what you're seeing from Japan. And you know, we've been fortunate enough to work with your company on some transactions in Japan, but we do know that you have done different structures and have been exploring various types of financing alternatives, not just the traditional sale and leaseback. Maybe you can tell us a bit what you've been seeing.
Absolutely, Nicolas. The Japanese market is, I would say, very relationship driven. We have been cultivating this relationship for many years until we managed to close our first transaction together a couple of years ago. And over the last 2 years, we have closed 8 transactions of almost 150 million in total. Most of our transactions were, as you said, leasing deals with highly esteemed Japanese ship owners, but we have also closed 3 traditional senior financing deals as well. On the senior financing transactions, they're usually provided by either mega banks or the local banks or financial arms of big groups. The senior debt is typically between 60 to 80% LTV, with standard tenors between 5 to 7 years, with standard amortization profiles about 15 years, and a covenant light package, I would say, usually consisting of security cover ratio only. We have done 3 transactions in this space with about 50 million in total single vessel financings. On the operating leasing side, basically the operating lease is funded by an equity investment which is provided by a Japanese financial ship owner, and senior debt which is provided usually by local Japanese banks, which is driven by the relationship with the directly with the Japanese ship owner. The main terms there, again, there is usually very high leverage with long tenors between 7 to 10 years, long amortization profiles, and quite attractive pricing. Again, very light covenant package. And in this space, we have closed 5 transactions, single vessel transactions, again, of about 100 million in total over the last 2 years. As my other co-panelists have mentioned, there is a preference over Japanese built vessels and time charters to be attached on the leasebacks. However, we have seen and we have done transactions with involving top-tier Chinese vessels as well. And we have, as we are sensitive on that, we have done transactions primarily that there is no time charter attached, which was one of our main priorities in this market. Finally, the other product is the so-called JOLCO, the Japanese operating leases with call options, usually preferred for new building vessels. We haven't done any such transaction so far. We haven't financed any new building so far in the Japanese market.
Okay, thank you. I think one thing that's always characterized the Japanese market, whether it's the ship finance side of it or other parts of the, call it maritime market related to Japan, there's always been a bit of mystique surrounding that market. And we already live in a fairly complex world where a lot of changes and shifts have taken place during the last 12 months, not only due to COVID, but especially in our industry, due to a very quick ramp up of call it people's focus on emissions and the technology shift, etc. That's driven by the chase towards reducing the carbon footprint. So with all these things in mind, what's your view on the current state of the Japanese financing market? And do you think, how do you see that things like this technology shift and new emissions regulations have been shaping and will be shaping the Japanese financing market in the near term? Maybe we can start with Onaka-san.
Okay, thank you. Well, that's really good question to be asked. And well, needless to say, the emission ESG, SDG, if you like, the changing situation is very critical and important. And the key is who bears the cost for those changings. And we do not have any, clear and right answers. Right. So at this moment, Japanese players are carefully watching what's going on in a European market and other, maybe North American space. So that is the situation. And because of that, we do not have the new investment in new ships at this moment. So that's the reason why the typical type of the finance opportunities are very limited, as I mentioned. Long-term employment with very decent the credits like Spyrou and Grindrod and providers. So those transactions are very crowded. So many new the players, local the banks who had not financed the shipping space in history. So for banks, it is getting more difficult to finance in those typical type of the finance opportunities. But once again, from now on, those are new phenomena in emission and the new regulations would be one of the most important issues. Thank you.
Okay, great. Matsumoto-san, FPG, like most of the other JOLCO related players, have always been quite keen on large size container ships with long-term charters to the major liner companies. And in that segment, for mega container ships, there has actually been quite a large number of vessels ordered and now also built and delivered with things like dual fuel LNG propulsion, which I think most people can agree will be considered a transitional fuel rather than what we'll be seeing 20, 30 years from now necessarily. But as a JOLCO player and someone who has quite a big exposure to the container industry, how do you see these changes in technology and what's your eagerness on financing vessels with call it future-oriented propulsion systems, etc.?
Yeah, vessel itself is ordered by charterer. That's why we don't have a specific preference on the ESG-friendly design. Most important thing for us is in the JOLCO transaction, one of the requirements when we select the potential transaction is whether JOLCO asset is core fleet for the charterer or not. In other words, whether the charterer has the intention to use the JOLCO asset beyond the purchase option timing or not. We are relatively flexible on the type of asset or specification of the asset. If we can confirm that the answer is yes to the previous question, so yeah, so as long as the charterer has an intention to use it for a long-term basis, we can accept such kind of vessel, and we will proceed for the transaction.
Okay, thank you. Moving on to an inevitable topic, you know, the COVID pandemic and how that's affected, I guess, not our industry as a whole, because that's a larger topic, but the access to the Japanese ship financing market and the ability to transact in that market for Western owners. You know, in our firm, we see that, for example, not being able to travel to Japan actually has an impact, because while we believe that the whole world has got more accustomed to having Teams and Zoom meetings, there is still a tangible value in being able to go and meet people face to face. So that's one thing, but looking at something more major like you know, all the charter renegotiations that we've seen among some of the dry cargo players that have been ongoing with local ship owners, obviously affecting the local banks, etc. Things like the COVID pandemic's impact on the airline industry, to which JOLCO has a big exposure. Maybe we can continue with you, Matsumoto-san, and get your views on COVID's impact on the market.
Yeah, although the COVID-19 made a negative impact on the shipping company, the level of the impact was much smaller than that on the airline market. That means investors see the vessel JOLCO and container box JOLCO as a safer investment compared with the aircraft JOLCO, in which some of them had the negative experiences, such as airline bankruptcy or rescheduling. Therefore, the investors tend to prefer the vessel JOLCO or container box JOLCO if tax merit is the same. Yeah, we are aware some of the small operator may have a little bit struggle to arranging the daily cash flow, but the overall industry conditions, shipping industry is much healthier, especially for the liner company in the recent few months. Okay,
thank you. Martyn, if we go to you, obviously Grindrod and the Grindrod group being a player that's almost famous for having a very long track record in Japan and having done a lot of transactions with the local ship owners and then again supported by the local banks. I guess we can agree that you've built that business through a lot of hard effort over the years, traveling back and forth to Japan, sitting down, meeting with people, meeting with the banks. It's required putting in a lot of face time. Obviously, for the last 10 months, you haven't been able to do that to a large extent, at least not in the same way as before. How have you seen this impact your business and your access to that market?
Very good point. As Simos said, Japan is all about relationships. And I suppose we've been fortunate, having been there so long, that yes, normally I'm up in Japan 4 or 5 times a year, and it's non-stop. And so yes, the karaoke and sake over many years, it works. But what we have done in that process, of course, is build relationships. So for us, it hasn't had much of an effect. Yes, we're on the phone. We did a sale and lease back in November into December with people we've done business with before. So we have been very fortunate because we put the hard yards in And the thing about Japan, it is relationships. Once you have the trust, you honor it. You don't renegotiate, and you have to behave. And I think we've been very fortunate in that respect. For others, I can imagine it is going to be very tough. And it's something that the industry as a whole, because we are shipping, it is, to be blunt, it's not what you know, it's who you know and who you trust. And without that face-to-face interaction, it's something that going forward we've got to get back to. Otherwise, it's going to be problems. So we have been fortunate in that respect. But otherwise, yes, Zoom, on calls regularly, chatting, keeping in touch with people, but it's not the same.
Okay, thank you. I guess that puts you at the advantageous, or companies like Starbuck and yourself at the advantageous situation, since you already put in a lot of that work. But I guess that also makes it harder for new prospective entrants into that market to get in there, because it's not the same trying to set something up for the first time over Zoom or Teams in that market. At least that's my experience.
Yes, it is. But as we saw with the Shima the other day, which was interesting, that the fact that for the first time in 45 years, they actually went to Greece, albeit fantastic names, of course. So I think it's inevitable that Japan will change to a degree, but it takes time. But again, I think they will be picking the names they want to do business with, which is the important thing. And you've got to have the balance sheet and the reputation and track record.
Okay, thank you. Now that we've seen basically the rest of the world, Europe and the US, not only move into, but having now been in a low interest rate environment for a very long time, one would think that that would give, or that the capital emanating from Western capital sources on the debt side would be cheaper. And in that sense, put the traditionally very cheap Japanese debt not at the same advantage as it's had historically. You know, Japan having lived in a zero interest rate environment for decades now. If we start with Onaka-san, do you see that you're getting increased competition from Western lenders, or do you feel that they are kind of a different part of the universe to what the Japanese megabanks are and where they're playing? Onaka-san, that one's for you, if you're still there. Okay, then I guess we can address that question to someone on the other side of the table. Simos?
Okay.
Oh, okay.
But
You're back.
okay, I'm coming back.
Good.
Okay. Well, I do not think Japanese capital market competitiveness will be affected by other interest rate situations. Financial competitiveness, only actual interest rates, but also the risk appetite, and also the risk tolerance, if you like. And those situation has not changed at all. And still, Japanese finance is very active under these conditions. That's the first reason why the Japanese market competitiveness will not be affected. And secondly, quite a big portion of Japanese the market debts are US dollars denominated. So in US dollars transactions, the Japanese market low interest rates are not necessarily the advantage for competitiveness. Thank you.
Okay, I think if we move to Simos, I'd like to get your views on this as well, but just throwing in there that when you do a lot of these leases with the local investors or local owners in Japan that are supported by the local smaller banks in Japan, very often those loans or the back leverage that they get is in Japanese yen. So they have been willing to take that, call it currency risk, in order to tap into that, call it cheaper currency debt. Have you seen, what's your view on that? When you have done your leases, have you seen that any of that currency risk is transferred to you? And do you think that that will change now that we've seen, consistently very low interest rates in US dollars? Or how do you view that situation?
Well, Nicolas, the global shipping financial landscape has changed tremendously over the last 10 years. We've seen over the last decade traditional big Western European and American banks gradually getting out of shipping. We've seen other sources of financing like capital markets, public equity, private equity, bonds, diminishing tremendously over the years. And this has supported, basically, created opportunities for the Japanese operating lease structures and investors who have entered, who have expanded actually with relationships globally. From our perspective as a ship owner, the lower interest rates mean primarily that there is more competition in pricing of loans from European and US banks versus the Japanese market. Western banks that remain active in the ship financing are now offering very attractive pricing terms, which get even more attractive when they compete to get high quality names as clients. After all these years, lenders have become quite selective, and when they compete to get top tier clients, they offer quite competitive pricings. The prime competitive advantage so far of the Japanese financing in this low interest rate environment remains the high leverage that they still can offer versus the Western European banks. On the other hand, we have to add the competition that is gradually getting stronger from China. We've seen the Chinese banks and Chinese leasing houses becoming more aggressive and more competitive over the last few years. They offer now competitive terms. They've lowered significantly their pricing, and they're able to offer big tickets at lower costs and with quite high leverage as well. So this is another source of competition for the Japanese market. To come back to your question, Nicolas, from the Japanese financier perspective, I believe that the price competition that is now being faced with in this low interest rate environment will mean that the yield spread from the new USD denominated loans versus the domestic rates will decrease, thus reducing the profitability for the Japanese financier. And I also assume that the short-term USD depreciation versus the Japanese yen is also not positive for the value of the loan portfolios, which are denominated in USD for the Japanese banks. But I believe that this is more of a short-term issue rather than a long-term issue for the Japanese financiers.
Okay, thank you. Jumping on to another topic which I find quite interesting, which was kind of unthinkable a few years ago, if you ask me, is the examples that we've seen in the recent, call it 12 to 18 months, of Japanese tonnage providers who traditionally have also been involved in sale and lease backs and long-term charters out with options, etc., now accepting equity in listed Western listed shipping companies as equity component in certain transactions. So, for example, a leasing company doing a sale leaseback with a listed Western owner, but taking stock rather than cash as equity part of the capital structure in the transaction. Now, that is obviously a structure that I think would be extremely attractive to quite a number of listed Western shipping companies. But do you think that we'll see more of that in the future? I can maybe continue with you, Simos.
Thank you, Nicolas. Japanese capital for international shipping companies so far has almost exclusively come in the form of debt. However, as Western banks reduce their exposure to shipping and regulation limit leverage, eventually I believe that there will be an increased need to replace that capital with more equity. Given also the fatigue of Western investors and capital markets, as we said before, in shipping, combined with the lack of growth in the Japanese shipping companies, I believe we could gradually see Japanese equity funding to increase in international shipping companies. We have heard so far that some lessors are trying to move to transaction structures that include some sort of equity funding as well in order to enhance their returns. From our side as Starbulk, we haven't seen any such trend yet. We haven't done any such transaction. And all of our lease transactions that we have done are pure debt deals without any equity component. Having said that, Starbulk is among the pioneers who have used their equity as a currency to acquire assets. During the last 3 years, we have closed 6 transactions and we have bought approximately 50 vessels using a combination of debt financing and equity issued at our net asset value. So from our side, we would evaluate any such opportunity if given that we'd be offered in Japan to issue equity as well, provided that, of course, it will not deteriorate our overall cost of capital. The equity will be issued at net asset value or above, and that the overall transaction, of course, will be accretive to our shareholders.
Okay, thank you. Martyn, you also lead a listed shipping company, and you've been a player in the Japanese market for a very long time, so I guess your name is probably very familiar to a lot of people in Japan. What do you think about the prospects of more, call it, equity funding or transactions with an equity component coming from Japan going forward?
It's interesting. Obviously, there have been a number of deals done. I would categorize the deals as 2 types: those that were willingly done and those that met whereby maybe the Japanese partner didn't have much of a choice in terms of either being renegotiated or even declined. So for us, on the positive side, it's something we look at. But of course, at the moment, we all suffer from chronically depressed share prices, substantial discounts to NAV. And as Simos and Starbulk have done very well, they've been able to do NAV deals. Now, for our point of view, it would have to be NAV, which we've had discussions with. But of course, if someone comes in with such a low share price, then can they get out? And how much of the company do they then have? So it is difficult, but with the rapidly improving dry cargo market, and I'm not going to jinx things. Petros warned me, Simos, a little while ago, don't say too much, but you never know. We might get a decent market. And then I think where we start to get closer to NAV, I think this kind of deal could be of interest, yeah, as a way out. But at the moment, the disconnect is we found is just too much, where they would come in at NAV, they'd immediately get shares at a lower level, and in effect be trapped in the company, which we wouldn't want either. So it is something, but I think we need that little bit better market, and then I think there can be some serious discussions, yeah.
I think if that materializes, it will also be very interesting to see, what the, call it, investment horizon of that type of, call it, investor will have. Will they sit in the stock for a number of years, or is it just a shorter term play to catch some uplift and boost their, call it, blended returns? Well, it remains to be seen, but I think that's a very interesting topic that people should pay attention to, because we have seen a few, call it, voluntary deals in the last 12 to 18 months. And I have been surprised at some of the names that have succeeded in doing those deals, because not all those companies have very liquid stock. So let's see. On to the next question. Given the turmoil of 2020, do you think that the key criteria used by the Japanese financing institutions to evaluate transactions with international or foreign clients, have those criteria changed? Onaka-san, one for you.
Thank you, Nicolas. The answer is no, because, well, the COVID-19 is a black swan indeed, but it's not a catastrophic disaster in a maritime space. So the market is, for instance, as Matsumoto-san mentioned, less volatile than the aviation market. So we believe we do not have to change the key criteria to value our customers' financial fundamentals. Well, in long term, once again, the environmental regulations tackling are more critical to credit fundamentals of our customers, I believe. Thank you.
Okay, going back again to this technology shift question, which we find very important these days. Matsumoto-san said earlier that the type of asset is not necessarily the issue here to them. It's more whether it's considered a strategic and core asset to the client, and assuming the client it has a strong enough balance sheet and are attractive as a potential borrower, then FPG, for example, would provide finance to vessels also with, call it, new propulsion systems. But I'd also like to expand that question a bit into totally new types of vessels. We're seeing the emergence of the offshore wind industry, whereby a number of companies have started ordering and building. Well, a few have also in the past, but we're seeing more and more companies trying to get into that industry, building offshore windmill installation vessels, for example, or service vessels for the windmill projects, so-called SOVs. Matsumoto-san, would you look at financing that type of asset also? We're talking about assets that are in no way commoditized, very specialized, and if the charter for some reason were to default, not necessarily an asset that you can just turn around and recharter or sell with ease. What's your view on that, Matsumoto-san?
Yeah, when we consider the new transaction as the JOLCO transaction, two important criteria is the charter's credit and the whether that is a core asset, a core fleet or not. If the potential transaction can meet those two criteria, even if the asset itself is uncertain, one new type of asset, but still even if that project may not be successful, still the charterer had the enough cash, sufficient cash available in the balance sheet, we can proceed for the transaction. Probably we may request a certain little bit stringent return condition, but in general, that kind of transaction can be acceptable to us.
Okay, thank you. That's
well, Nicolas.
Yeah.
Nicolas,
go ahead.
May I make one comment on that? Well, as senior finance providers, we've got slightly different opinions. And as a the senior providers to JOLCO transaction, we do not prefer those type of assets, like the wind farms supporting vessels or some oil production type, or either because we've got some fairly bad experiences on that space. So that is the comment. Thank you.
Well, I think at the moment, SMTV will probably do well to stay away from those segments, because Western banks are bending over backwards to finance those type of assets. And it seems that there's no limit to their appetite to funding anything green. So the space is probably a good one to stay away from in the near future, if you want to see decent margins. That's maybe our view, but thanks for your comment. If we move on to call it the most significant future challenges to the Japanese financing market, one point that was mentioned earlier was, I think it was from Simos, that the Japanese, call it the J3, the big Japanese operators, they have not succeeded, I guess, in expanding their business at the same pace as they have historically. We've seen some kind of stagnation there. And that means that the whole landscape within Japan has maybe shifted a bit. So in order for the Japanese financiers, whether they're mega banks, JOLCO arrangers, institutional investors, local owners, for all of you to maintain the size of your exposure or business in the maritime industry, there will have to be a shift abroad to a larger extent. How do you see that going forward? Do you see that as a challenge, or do you expect that you will just pick up more market share relative to your competitors and thereby maintain your exposure, or do you think that you also need to increase your overseas business? Maybe that's one for FPG to start with.
Sorry. Yeah. We are plan to expand more business. Could you say your question again? Sorry.
I guess as one of the significant future challenges to the Japanese financing market, from a Japanese, call it lender or capital provider's perspective, is the fact that your domestic business, shipping business, the NYK, MOL, K-Line, etc., their growth has stagnated. So to the extent that you want to either maintain or grow your business, you will most likely need to do more business with foreign ship owners. Do you see this as a challenge or a threat, or do you feel that you are already in a position where you are spending a lot of your time working with foreign borrowers and lessees?
Yeah, from our business perspective, that will be the opportunity, because some of our competitor is taking a conservative approach when underwriting the equity for shipping overseas shipping company right now, because of the market slump in Japan, especially in the equity market. So some of the equity house are not have a confidence to sell the equity, but we have many investors all over Japan. So we have a certain that some of the amount we can surely can sell the Japanese market. So that's why we are trying to find the more business opportunity, especially for the overseas shipping company. And the current now the condition of the underwriting economics is slightly better than the last year. So that is a good timing for us to expand the business, overseas business. However, the current market situation, especially for the liner shipping company market condition is very good. That will improve the liquidity position of the cash. That will decrease the demand for the finance for JOLCO transaction. That is a sad thing, unfortunately.
Okay, thank you. Moving on to, or actually going back again to this sort of everything related to a greener future. You know, we've seen that a number of, or that some Japanese banks have been vocal supporters of the Poseidon principles. This is a very hot topic with the Western big lenders. How do you think that this will impact the Japanese market? You know, we understand that mega banks such as SMBC or SMTB or Mizuho obviously feel both the pressure and it's natural to support this type of or be vocal supporters of this type of initiative. But how do you think that this will impact the broader market in Japan? You know, all the mid-sized banks and local banks, will they adopt these same principles and be as stringent when it comes to things like green scrapping and emissions regulations? Or do you think that we'll see some time pass before you see the same adoption level in Japan as you've seen in the West? Maybe start with Onaka-san on that one.
Well, thank you, Nicolas. I would say yes. The major banks, especially mega banks, will follow us, being signatories of Poseidon principles. That is the only appropriate answer by one of the steering committee member of PPA, and especially since Prime Minister Suga stated that Japan is going to try to reduce greenhouse gas emission by 50% by 2050. There, in all of the industry sectors, this emission tackling is the key issues. And the shipping space is not the exception of it. So as far as the major banks go, I believe there many banks will follow us. But in the local banks, we still need to explain what is the PPAs and how does it affect your business. Not only banks, but also tonnage providers and the shipping companies. At this moment, I have to say that we have not received enough anonymous the supports from our customers. So it takes some time to get the support. But eventually, that will be the de facto standard of even in a Japanese financial space, just like in Europe.
Okay, thank you. We got a few questions on the Q&A, but unfortunately we have run out of time. So I will relay the questions to the individuals on the panel offline and try to see if we can get answers back to the people who posed the questions. So with that, I would like to thank all of you for your time, for a good panel with insightful answers. It will be very interesting to see what the future holds for the Japanese market, and I look forward to hopefully seeing, I guess, all of you somewhere, whether in Tokyo or in Athens or Singapore, in the near future, hopefully, once these vaccines are rolled out and the world starts going back to normal. So thanks again to all of you. Thank you very much to Capital Link for arranging this panel discussion. and I wish you all a great day.
Thank
Thanks,
you.
Nicolas.
Thank you, Nicolas.
Thank you.
Thank you.
Thank you.